Sunday, March 1st, 08:47 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Starting a new month, tonight the futures market's open. So yesterday, Friday was the last trading day for U.S. financial assets. So let's look at the monthly update, how February performed. An important category, commodities. Commodities. Such an important category and gets lower in the queue for news compared to company stocks, compared to crypto or yields. The commodities market has several categories. I'm going to go over those categories and several financial instruments in those categories. Several of the commodity categories are energy, metals, agricultural and grains, livestock. Huge impact on the economies, on your daily needs. Some people are not situation aware, so I'll say it again. As many financial assets, specifically commodities, have embedded costs. Many commodities use fossil fuels for transportation, for production. So again, when that one underlining, fossil fuel, be it coal, crude oil, natural gas, goes higher, that adds another cost to those commodities, such as livestock, grains, fruits, vegetables, eggs, those things. And also diseases. If you're not situation aware, people want to blame a political party for the past years of the egg prices. Not situation aware. Well, back in 2022, 2023, or 2021. Yeah, 2022, there was a thing called bird flu. Well, what was another name? Was a influence disease, but with bird flu that had killed over like 160 million, maybe more birds up to 2022. And that reduced the supply of eggs laying hens. So it made a spike in eggs in the United States. That got resolved. Also, cattle. There was a disease, or still is a disease, in Mexico. And the United States reduced importing and also had to slaughter a lot of cattle to prevent spreading of disease. So again, cattle takes a long time to raise, very expensive. And again, you slaughter that cattle, people are losing a lot of income. Those cattle farmers, they do a lot of hard work. That demand, as a stronger economy gets stronger, nations get stronger economies, or more people have more wealth, they typically lean to eating more red meat. Not as much as poultry or pork. The luxury of red meat. Again, there's a limited supply. And in my personal opinion, red meat tastes better than poultry. Tastes better than swine. That's why some people put a lot of seasonings on poultry to give it flavoring. But I do eat more poultry than I do red meat. So we're going to look at the two major energy, crude oil, natural gas. Situation where financial exchanges, there's different crude oil. So there's West Texas crude oil, light sweet crude oil referred to, and there's the North Sea crude oil. There's also heating oil, but I'm going to show you the basic crude oil here. Then there's natural gas. So again, left crude oil, right natural gas. Crude oils, such as the North Sea oil, light sweet crude oil, on the commodities market have different prices. It's very interesting if you ever look at those. But I go by the main one I use for charting. West Texas light crude oil. Big different uses and needs also, those I've explained in the past. Again, currency values, commodities, all priced in US dollar on the financial exchanges. So again, weaker dollar, typically you see the inverse, strength in commodities. Stronger dollar, you often see the reduction of the price. Well, again, wars also spike up commodities. Russia invaded Ukraine, started the war, spike in commodities. Again, Ukraine is one of the largest producers of sunflower seed oil and huge crude oil and other commodities. It disrupted the supply, such as the crisis going in the Middle East right now, in Iran. Huge amount of fossil fuels come out of the Persian Gulf into the Indian Ocean. Well, there's a war if you're not aware. And threats from the Iranian government, military, to attack those vessels, take them as hostages. Well, if you're not situation aware, assurance, these ships carry assurance. The assurance spiked past Friday. Yep, so they have to pay more assurance any ship that wants to navigate those seas. Same with the Red Sea. With the attacks of Yemen against commercial vessels in the Red Sea. Again, that military weapon systems, tools to Yemen military is given by Iran. So those ships going to the Red Sea had huge spikes in assurance. Some of them chose not to go to that sea. They went longer around Africa coast through the South Atlantic, North Atlantic. The longer a vessel is working from point A to point B, the more labor, higher costs, and the more fuel it uses. A lot of embedded costs. Same in the United States. When you have winter impacts, snows, ice roads, might have delays in trucks or trains. Those use big costs. And unfortunately, not all the trains in the United States run on electric. A lot of them are using fossil fuel, diesel. That price fluctuates too. 10-year chart, crude oil. Look at the high, 2022, and the low, 2020. I want to put this back on a longer duration because the highest in my life that ever was during the Desert Storm, 2008. That was the high. And here's the low, 2020. Huge trading range, man. Yep. So let's put this to current situation. Again, what I just showed you was the war crisis all the way back then. How are we doing right now? Here's the low of last year. Zoom in some more. Here's the low this year. And the past February, higher high, higher low. See that big green candle for the month of January? I labeled midpoint. That's a setup. That's how I do setups. We came in and tested it. I went to the lower time frames and took bullish trades. Did outstanding. I still have bullish trades. I had it more Thursday, Wednesday. Yep. Using options, advanced option strategies for credit. So again, we close higher high, higher low. The trend is up. I'm looking to see prices continue going higher. Pullbacks, I'm looking for opportunities to reload. Natural gas. I have a lot of positions on, bullish positions. Again, using advanced strategies. Look what we did. Closed red for the month. Big solid body. Lower high, lower low. The trend reversed. It's down. New low for the year. We are in the demand zone. We also broke the trend, closed below the trend. I'm not a happy camper about that. Might go down to the swing low of last year. Well, I'm using advanced option strategies. I am still earning income. Again, explain that in other videos with options. I am in bullish positions with options earning income, even with the stock declining. So those are two major energy commodities. There's also coal. United States, certain states, huge production of coal. Give you an example, West Virginia. Large percentage of that coal is exported to China. Yep, to China. So China's paying U.S. businesses for our fossil fuels, and we are still supplying China. China is still a threat and doing threats to the United States and Western countries. Think about that. Why would you want to be giving that? Well, again, jobs, less security. History. During World War II, the United States was the #1 production of fossil fuels, oil. When Japan invaded China, Manchuria area, after that, United States cut off oil supplies to Japan. Japan had less oil, so I had to go to other countries to get it. And that was another reason that Japan decided to attack the United States, Pearl Harbor. Again, when you cut off their energy source. Yep. Okay, that was energy. Let's go on to the next commodities of metals. Gold, inside candle for the month. I have bullish positions on that too. Yep. Look at this big run up. Massive consolidation back there. Big run up. Nice. Silver. We had actually made a lower low, the new low for the year. Lower high. The trend is down, but we closed way above the close of the prior month. That's a strong reversal. Nice. Big wick buyers. Just a different performance again between gold and silver with the charts. Again, gold inside candle, bullish, went down, tested midpoint. Again, candlestick charting. That's what I use. Platinum, bullish. Nice. Again, similar to silver, lower high, lower low, closed above that other candle body. And copper. January was the bearish pin bar, and again we closed the new low for the year and closed above that close. Again, strong reversals. Again, strong demand. And again, copper, huge industrial usage on your appliances, your HVAC systems, a lot of electronic devices use copper. It's the same with the old school telecommunication lines, utility lines. Yeah. This is your old coax versus fiber. But all these metals have industrial use. So again, also all these electric car chargers use copper. Now let's go look at the foodies. Agricultural grains. 10-year chart, each candle's a month. Corn. Who likes corn? I like corn on the cob. I boil mine. Look, here's the high, 2022. Here's the low of 2020. Here's the low of 2024. Here's the low of 2025. Again, staircase pattern, higher high. Close green for the month, higher high, higher low. So the low of last year, trend up, pull back. Very likely we're going to have a continuation going towards the highs of last year. Rough rice. Yep, broke above the high of last month. Higher high, higher low. Again, the trend is up. Food, staples going higher the price. US dollar value declining. More inflation. Wheat, big strong move up for the month. So massive consolidation. All this last year and the prior year. Breakout, strong move up. It's not all necessary for demand. Again, part of it I mentioned, I share again, decline in the US dollar, wars in other nations created by other leadership Soybean oil broke the highs of last year. Look how strong this candle is. Huge body, extremely bullish. Hopefully the farmers have good investment returns this year because they've been struggling the last few years. Fortunately, a lot of U.S. farmers are limited where they could bring their supply to. So the big companies that buy the commodities control the price of what they're going to pay instead of more of a free market. Because again, a lot of these farmers don't have the means to transport their product abroad or to other states. So they bring them to distribution centers not too far from their farms. And those distribution centers are owned by big company. So they make the bigger profits, those companies that control the distribution, unless you buy local from that farmer. Soybean meal, big strong reversal. Big bullish engulfing candle. Look at those two red candles got trapped in there. Nice. Like a seller shut off. Again, expect this to go higher. And soybean. Again, big strong move. Nice. So again, look at this. Soybean oil, soybean meal, and the basic soybean. All strong. All these commodities. The ag up strong. We also use some of these products, corn, soy, to feed our livestock. Other embedded costs. Now it costs more to feed the livestock. 10-month chart, candle, 10-month chart. Each month it's a candle. Live cattle, higher high, higher low than last month. Strong move up here. Again, we closed red back inside that prior month, but we haven't made a fully trend reversal yet. Could go down here, midpoint. Feeder cattle, this is up. Just like it sounds, feeder cattle. It's used to feed other animals. Same thing, same similar pattern. Close red back inside that prior candle, might go back here at midpoint. So you may also have seasonal of certain food products. Just like hog in certain nations in Southeast Asia, there's bigger demand during holidays for hog because some countries have also big embedded costs. And then the wealth of some of those countries is used more over holidays, putting spikes up in hog. There we go, lean hog. Big strong move up for the month. New high for the year. Higher high, higher low, big move up. Again, we had a big impulse move down here. See what happens if it gets to the high of there. Could be a reversal. Yep. Thank you as always, spending just a little time with me. That's it for the video. Thanks for watching.